Hi everybody, this is TJ with the Backpack Trader. Lately I've received a slew of questions asking basically the same thing. How am I able to come up with so many effective trading methods? Or what are the ingredients that go into my strategies so that they always seem to remain evergreen? Another question I've received lately is simply, what is my secret sauce? Or similar questions like, how do I create strategies with dynamic setups that can tune themselves to market conditions bar after bar? So I thought it would be helpful to many of you if I did a short video in an attempt to answer some of these questions. And basically, after much reflection, I've boiled it down to 3 essential ingredients. And that's the subject of this video today. So let's start with this price chart. Really, it can be any price chart, but I've chosen unleaded gas. This is a 20-tick momentum bar. It's a chart that I like to trade. It gives great trades and it works with my strategies. And it will illustrate the points that I'm going to make very clearly. But it could really be any chart. These concepts work no matter what. So I've named this video the 3 essential ingredients to a successful trade strategy. The first ingredient is something that allows us to determine the balance of power between buyers and sellers. In my mind, and what I've learned over the years, is it's very important to know who's in charge. If you know who's in charge, buyers or sellers, you've got a huge advantage in the market. You know what side to stay away from, and you know what side to focus on. So what is my favorite way of determining that? Well, it's a custom indicator that I use called the balance line, and it looks like this. This is a very unique indicator, and I use it in many ways. But the most important thing to know is that it is the line in the sand that delineates the balance of power between buyers and sellers. And as long as bars are closing below the line, I want to stay short or go short. And as they're closing above the line, I want to favor the long side. And it works really well. And if you only have this and nothing else, then you have a big advantage over most traders in the market. Now, I realize that many of you will not have this custom indicator. If you have one of my strategies, you're going to have this indicator. But if you don't, there's another way to get a similar result. Quite simply, it's the poor man's substitute, but it's really easy. And all we have to do is turn it on. And what I'm talking about is a simple moving average set to 9. We'll make it a nice red one, like so. This works pretty well. Does it work as well as my balance line? I don't know. I'm prone to think my balance line is a little bit more accurate, but this works really well, as you can see. If you favor the lower side of the line, only stay short, you're going to do a lot better than if you're going long, and vice versa. So that is the first ingredient to a successful strategy, determining who's in charge. Where is the line that delineates the balance of power between buyers and sellers? I often refer to it as the great crocodile pit line. You don't want to get dragged into the crocodile pit. Now, the next ingredient is some sort of confirming indicator. Now, that comes in many shapes and sizes, and you don't need really too many. You basically need 1, maybe 2. So what is a confirming indicator? Well, for me, it might just be a chart pattern. A chart pattern counts as a confirming indicator. For example, you can see right here that the market makes a low, and then it comes up, tests the crocodile pit line, and then attempts to make a new low and fails to do so. So you have a little 1, 2, 3 bottom formation here. Then once we see a price closing above our balance line, our crocodile pit line, and breaking over this number 2 point here, well, we can get long. And if you just do that and nothing else, you can do quite well. Sure, there are going to be nuances, and there are definitely ways to improve this, but just these two things alone will put you ahead of most traders. Now, there is a third piece of information, the third confirming indicator, which is critical, and for me, I can't trade without it. It's available to everybody. It's price action itself. I call it price action confirmation. So, for example, we have our 1, 2, 3 bottom formation. We have the price closing up above our balance of power line. In this case, a simple moving average of 9, set to 9. Or for me, it might be my balance of power line, my balance line, whatever. Once you get your green bar closing above, we want to see price action push above this number 2 point, and then maybe go 2 or 3 more ticks. So we can use horizontal lines or some way to mark where that might be. So at the right edge of the chart, for example, where real trading takes place, this could push lower, right? I mean, everything is below the line. We can get another move down. We get a close above the line, a close below the line. We're expecting it to come down and test these levels, and it tries, and it fails, and it makes a higher low, a 1, 2, 3 bottom. So at this point, we can look at the number 2 point here. We can go a little bit above it, and then we could ask for a green bar to push up and close above that line. And so when it does, now maybe we can get long here, or we might want to ask for even a little more confirmation, and we could put our entry 2 ticks above this bar here. Because what if it turns down and goes the other way? We can still avoid a losing trade. And we may look to the left and see this little pivot right here, and maybe we want to get above that. So you use the chart for your third piece of confirmation. You use price action itself. And so that's your entry 1 tick above this little place here. Now, it's going to change, and you have to be dynamic, and you could look at how it would have worked on the downside over here with your 1, 2, 3, failure to make a higher high, get right below this line here, and then the first bar that closes past it. Down, red, you could put an entry 2 ticks below that, for example, and then that's your entry. And when it triggers in, you're in the trade. And you could put your stop right up here above this, like so. So this is what you're risking. And, you know, you could figure out ways to measure targets and what have you. That's not really the subject of this video. But basically, that's it. 3 essential ingredients: the balance of power, some sort of confirming indicator, and in this case, we talked about just a chart pattern, but you could have used something else. There's plenty of other ways to confirm, and then price action itself, as long as it's on the right side of our balance of power line. Very simple. It's a simple method. From this forms the basis of many winning trading strategies. All right, so there's only one way to do it. There's a zillion other ways, but this is an effective way. I hope you enjoyed this video. You kind of got a little bit of insight into the way I think about things in the market. I want to invite you to join us in our YouTube channel, The Backpack Trader, as well as joining us in our live trade room. We do a live trade room Monday through Thursdays. We live stream on YouTube. We start around 9:30 in the morning, and you're welcome to join us and see how we trade basically every day. Well, Monday through Thursday. So you're all invited. I hope to see you there. This is TJ with The Backpack Trader. See you on the next video.